Hi there, Vinicius Brazil, Santa Clara real estate guy with a market update for October 2021, and just want to go over what's happening on the market, look at some figures from last month's market in terms of sales and what's happening, look at inventory levels, and just talk about what's going on. So without any further ado, let's take a look at the Santa Clara real estate market. So every month I publish a market update, and it's here on my blog. I send it out as a newsletter to subscribers, and of course post it on Facebook, and I'll even upload this video on YouTube. So it's pretty easy to find. If you want to subscribe, you can either send me an email or you can subscribe from our blog as well. But anyway, what I basically do is I go through what's happening in the market, and what I'm going to do is just go through the blog post. So just to recap what's happened in September of last month, well, we had 61 single family homes that sold. That's one more that sold in August. So a lot of homes were selling in the last 2 months. So the average price that sold in September was 1.65, about $16,000 lower than August's figure. So roughly about the same. Median price was a little bit higher, about 50,000. But what I noticed in the summer and even in now September and October is prices are pretty much stabilized. They didn't really go up much, in the summer months, with the exception of the higher end market. Those homes that are really sought after neighborhoods in Santa Clara, or maybe perhaps homes that are really fixed up and just showed really nicely. Those typically did really well and sold for much higher prices. But on average, in the last 3, maybe 4 months, the market hasn't been cooking like it was in the beginning of the year, right? So another thing to note here is the average cost per square foot had an actual slight decrease from 1,125 to about 1,100. Again, not a big difference. When you look at that metric in terms of price of square foot, one of the things you have to take into consideration is, well, a larger home has a lower price per square foot than a smaller home, right? So any given month, there could be larger homes selling, or there could be more smaller homes selling, and that number is going to fluctuate. So in all these figures, it's really important to look at the trend overall to get a better idea of where the market is transitioning, right? So on average, homes that sold did at 9.5% over asking, compared to 9.7% over the previous month. So homes are selling over asking, at least the ones that did. A factor of that is because of pricing. Agents are still pricing these homes low to get multiple offers, and of course they typically will sell over asking. So this is, I think, the most important number to focus on, and that's the inventory number. So we started in the month of September with 36 active single-family homes and finished with 35. So inventory in September didn't climb and it didn't really drop. It stayed pretty much the same. We're getting into the fall market, and typically in September, that's what you pretty much would expect. Maybe things would increase, maybe things would decrease. In this case, they stayed the same, right? So we've got a nice little picture graph here, kind of summarizing some of that information. Here I kind of go into what I'm talking about, the high points or the important points to discuss about the market. So home values are holding up really well. There haven't been any significant drops in home values. Primarily single-family homes in this market are the ones that are really performing, right? Condos, townhomes, not so much, especially smaller condos like 1-bedroom or 2-bedroom condos. Those are really lagging in the market, right? So right now, as of today, it is October 20th. There's only about 25 to 28 homes on the market. In fact, I just looked at the number this morning, and you can see here 1 of 28 homes on the market. So we're already down from 35 homes where we started the month, to 25. And that's what we're going to expect in the fall. As we're going into the winter, into the holiday season, we're going to see less and less inventory. And typically that will be good for home values. That'll make sure that home values will stay strong. And in some cases, home values may even start to rise if, there's just not enough homes and more bidding ensues, right? So Part of the market research that I do is I use Altos Research, which is a tool that emails me weekly reports. It could send them out monthly, but I get weekly reports on Altos. You can have links to them here, and I'll basically show you what these look like. This is the back end, and here's the report for Santa Clara. If you live in a certain zip code, whether it be 95050, 95051, or 54, you can get more specific data for that zip code. And if you know Santa Clara, you know that those zip codes are pretty unique and to themselves, right? They're very different. 95050 is much different than 95051, and then 95054 is also different from the other two. So really important to just get the information for your zip code. I'm going to just be looking at Santa Clara as a whole, and this is the monthly or weekly report that I'll get. It gets generated weekly, and it can be mailed out to you, weekly, twice a month, or monthly, or even quarterly. And really, there's a lot of programs out there, whether you subscribe to Zillow, whether you subscribe to Redfin, and they'll give you a lot of information. It's a lot of stuff to look through, right? And what I typically will look at in this case is I'll look at these numbers right here and see where they're trending, right? And we can see median list price is pretty flat, and same thing, the median price for new listings, pretty flat, maybe trending a little bit upward, but not really. I mean, we're right here at 1.7, and at some point here we were at 1.7, so it's relatively flat. Price per square foot, you can see, has been dropping, which is interesting because, well, we've been seeing prices going up or staying stable, which to me means there's just larger homes being sold on the market. Average days on market has gone up, so that means some homes, when you're looking at average as opposed to median, average is going to take into consideration even homes that are lagging on the market, right? So there are some homes that are lagging on the market, and if we look at that, we can see, here's the list of all the homes that are listed right now. Here's the days on market, and we can see a lot of them are just listed, more than half, because we've got 28, about 14 have only been on the market less than 2 weeks. But there are a couple out here that are lingering, 2 to 3 weeks, not a whole lot, and they typically will be, on the higher end, but not all, right? So you can see that number is starting to creep up in terms of average, but median days on market, when they go in the middle there, it's still really low, right? So homes are still flying off the shelves if they're decent homes and good locations and priced, accurately. There's some other figures here. So, we're typically really busy individuals. We don't have time to look through these on a weekly basis or even really study these and try to make sense out of what the data is showing us. And that's why there's this market action index. This is a proprietary metric here that will tell you which direction the market's heading. If you want to drill down to more information, you've got various different graphs here. And the really nice thing about this is you can break it down into market segments. It breaks the market into 4 quartiles here, depending upon the price point of your home. And you can see how each one of these market segments is actually performing. And you can see they're all very different. So this is great. You can narrow your range down to the zip code that you live in, and then also the price point that you're in as well. You can also look at condos as well. If you're, own a single family home or a condo, you can look between these 2 different market segments. So if you don't have Altos and you'd like a copy, send me an email, or you can subscribe right here on my site. And they're absolutely free and extremely helpful to follow the market. All right, let's get back to the market update. So what's going on with inventory? As I mentioned before, this time of year, inventory is typically going to drop because of the holiday season. And what that means for the market is it's going to get difficult for buyers to see good homes, and there's going to be an imbalance, or more of an imbalance, between buyers and available listings. And therefore, the likelihood is that pricing will still remain very high. It won't drop. And there's even a possibility that pricing could start to go up this time of year if buyers are aggressive or the inventory drops at extreme low levels, right? And typically what I would expect in the next month is, inventory will drop down maybe between 15 to 20 homes, right, in November. And then by the time you get into December, somewhere between 20 to 10. And then by the end of the year, you may fall as low as less than 10 homes on the market, which would be a really tight market and very likely would result in some pretty good price appreciation next year, considering all the other circumstances of stock market and interest rates, remaining constant, right? And, let's talk about stock market and interest rates. So these are the main factors that have been driving a lot of the pricing in this area, and they've been driving pricing in this area for a long time. Interest rates continue to get lower and lower. We're always amazed by how low they are. And then, of course, the stock market, which the two do correlate, right? When there's low interest rates and a lot of money creation, we typically see the stock market performing really well. So those two have been really favorable for real estate, and it's no surprise that home values have also correlated with the market's rise and have increased not only here in Santa Clara Valley, but pretty much all over the country, right? So one thing to keep in mind, however, is interest rates are starting to creep upward. And part of that is due to what the Fed has announced in the last few weeks, their program to start to taper quantitative easing. So that's the Fed's program of printing or money creation. They're going to start to taper that down. And the speculation on the markets is that, well, that's not going to be good for, speculators, right? So they're immediately starting to sell off, some of their assets. And as a result, they're speculating that interest rates are going to start to go up, and interest rates are creeping up. So all this has to relate to the bond market because they're vying for the same capital. So the trend moving forward is that interest rates are going to start to go up, right? And that's not necessarily a bad thing, but it likely will slow down the market. Of course, interest rates will probably have to get quite a bit higher than where they are now. Right now, interest rates are hovering around 3% or even a little bit below, but they could likely maybe reach up to 4% sometime next year. And it'll be interesting to see what happens when interest rates get to that point. So what can we expect moving forward? Well, at least in the short term, right, for buyers. If you're a buyer right now and you're actively looking, well, there's not going to be a whole lot to look forward to in the next few months. You're not going to see a lot of houses. And those that you do like, that are exceptional houses, well, you can rest assured that there's going to be other buyers that are going to be interested in those homes, and you're going to be competing to buy that home. So more than likely, the challenge for buyers to buy in the next few months is going to be tough. And that could even get worse at the beginning of the year. We typically see that when inventory levels are really low. So if your goal is to get a home in the next few months, you probably want to be more aggressive now rather than wait for the beginning of the year. Sellers, well, opposite of buyers, this is actually a really good time for you to be thinking about selling your home. Contrary to reading maybe some blog posts or some ideas on the national level in terms of selling your home in the early winter, early fall, where some places will not recommend it. Selling your home in the fall or the early winter in our market is actually a great idea because you don't have much competition and you don't need to do as much work to your home to really make it to stand out because, well, there isn't much competition. So if you're thinking about selling and you want to sell, now is a good time. You might even want to get started earlier on planning your sale, right? But there's some things to think about that could be disrupting the market. Now, we talked about interest rates going up. There's some stuff going on in China right now. If you have not heard, one of their biggest property development companies is having a hard time making payments on its debt. And, I don't quite understand what the ramifications that will be. I don't think anyone really does, but there is a lot of concern over what that will mean. And of course, there's always fear of what they refer to as contagion, and that somehow becoming a bigger issue for the rest of us, the rest of the world. So that's a concern that, could eventually lead into something bigger, right? Hard to say at this point, way too early, but these are the kinds of things that buyers are looking at. If you're a Chinese buyer, you're probably well aware of this issue because this is big news in China. So you're maybe looking at that closely and trying to figure out what to do. Well, anyway, that's pretty much my recommendations and what I see going on in the market. For the next few months, it's going to be a tight market for sure. And I would expect that to be the case well into early next year, right? So if you've got any questions about Santa Clara real estate, any questions about the market in general, I'm always happy to talk to you. And thanks again for watching.